Good morning. Welcome to Develop Your Edge with Anthony Crudele. I'll be your co-host, Tom Schneider, CMT with NinjaTrader, and I can't wait to start this show. We're back. Anthony's back. We've got a lot to talk about today, but before we do all that, I want to remind everybody that futures and options trading contains substantial risk, is not for every trader. You could potentially lose all or even more than all of your initial investment. That's why we recommend using risk capital. What is risk capital? It's money that you can afford to lose, doesn't keep you up at night, doesn't extend your retirement horizon. Also want to remind everybody that past performance is not necessarily indicative of future results. And what we talk about here in this program contains neither trade recommendations nor financial advice and should be used for educational purposes only. And with that, I'd love to welcome to the show Anthony Crudele. How you doing, Anthony?
What's going on, Tom? Great to be with you today on another busy day in the markets.
Yeah, it seems like we're picking all the hot days to talk. Last week was a pretty interesting day. This week, though, I think is a historic red letter day. How'd you do today with this information that came in?
Well, I mean, it moved so much on the number. I couldn't even click in, and I saw what happened. I think we should obviously discuss really quick about it. I know that you and I are more technical guys. We're not macro guys, but in this environment, if you're not paying attention to macro, you're missing the whole thing of what's going on. And you had a large decline in month-over-month core inflation, and everybody's chasing that. You had the inflation numbers coming down, which then everybody starts to think that maybe the Fed is a lot closer to pausing raising interest rates. So the first thing you look at is what's happening in the dollar, what's happening in rates, and you see that you get the 2-year, 5-year, 10-year, 30-year coming off, and then of course that's going to be very bullish for stocks because one of the things that everybody knows, right? I think at this point, right, when Fed is raising rates, markets can go higher and maybe a lot higher than you think. I think I should actually say, well, yeah, when they're lowering rates, we get that bull market. When they're raising rates, we're in this bear market environment, and we're just not going to go up. Pretty much everybody believes that until the Fed stops raising rates. So this brings us closer to that destination today, and I think that's why you're seeing the moves that you're seeing.
I agree, and I think kind of follows what we've been hearing since the announcement last week, which is what, maybe another 75 basis point rate hike is not in the cards. Let's try a softer touch in the next meeting in December. And this certainly makes a case for that, right? Because we were at 8.5, I think, last month, inflation, somewhere around there, maybe a little less, maybe 8.3. And now we're looking at what is it, 6.5 today. So a big jump down, and so a big jump up in the market. But I think the key takeaway here for new traders, for traders who are experienced, is just be very vigilant around that number. Be aware of what's happening. We kind of haven't talked about the jobs numbers that came in at the same time, and they also came in kind of better than expected, but certainly not the effect that the CPI number had.
Yeah, in this environment, jobs that have actually remained pretty strong, and a lot of people have been talking about that, and that's kind of goes back to that debate about are we really in a recession or not? And most people were saying because jobs are as strong as they are, because the job market is, that we're most likely not. And like I said, I'm not a macro expert. I just kind of talk about what they're saying, right? My job is just to trade this stuff, and of course, that's what we're going to be discussing today. But I do think, the CPI number is just so important, and everybody is watching it. The Fed is watching it, of course, right? And so as traders, we just have to understand the environment. I mean, that's one of the things that we're going to talk about and Develop Your Edge every week between now and the end of the year, and probably beyond that, is what's the environment like? How do we go about getting an edge in the day? And when you have a day like this, and one thing I will say to everybody is that, sure, we talked a little bit about the numbers, but at the end of the day, the numbers, they don't really matter to us as traders, right? It's the reaction to the numbers. So now we saw what happened in all the markets that we're trading. So we understand that, right? We get that. This is what's happened. This is how the markets reacted. So now you have to realize technicals are secondary here, right? I mean, they're going to help guide you throughout the day, but you've got to remember that, like on a day like today, the market's looking forward now. CPI is out, job numbers are out. And so now your intraday technicals are just going to have less of an impact because of the environment, because we are in an environment where macro is going to lead the market. That is just the way it is. This is not a true technical environment. And that's probably why a lot of people can struggle if you're really very technical based, because you're going to get a lot of days like today where you might look at this and you get a head scratcher and go, I've not seen a move like this before off of my technicals. But today we're going to dig in a little bit and I'm going to show everybody how I trade these big gap up days, and just a really simple method that I use, knowing what the macro is in the background and just how I go about it.
Yeah, that's great. And, I agree. Days like today, you got to be a little bit fundamental or maybe all fundamental, somewhere in between. But the technicals, I like your style. We'll get into it. On a day like today, if you use technicals, a big spike like this can certainly throw off momentum indicators. They can throw off trend indicators. It's almost like we're just taking a chunk of the chart and moving it up, but then it trades kind of normally as we would expect, like we've seen, which is why I like your style, because it doesn't really take in that full picture of what's happened. It's a little more immediate and a little more, based more around the market open rather than the session open.
Oh yeah, exactly. I mean, that's why I was saying this morning when I was looking at what was happening after CPI, I'm like, I can't click into that move. I'm not going to click into that move. There's no way you could even justify a stop for that. I have to wait and see what happened on the open. And to be honest with you, and just till right now, I'm actually looking at some stuff. I got some alerts going on. I got stuff going on all around me here, Tom. But what I'm looking at is I think now we're set up actually for a long here in this pullback. So I actually started to put some orders in and starting to look at some things. So maybe we hop over to the charts and I start digging in a little bit and show you guys what I'm looking at here.
Great. Awesome. I love your charts, by the way, Anthony. I don't know if I've said it before, but I like the way you use charts. So,
all right. So first thing we have to do every day, in my opinion, whether you are a super short-term scalper, intraday swing trader, just an intraday trader, I just think you have to look at the big picture first. You have to identify what's happening on the big picture because it just helps you execute during the day. And so I go to a daily chart, right? Some people will even go further out. I like to go just to the daily chart and I look at really just a couple simple things we're going to look at today. One is the 10-day moving average. That's that blue line. It's just a simple 10-day moving average. Because I'm a shorter term day trader, I like to know where the average price has been over the last 2 weeks. 10-day moving average, 5 days a week. Pretty simple, right? And it's usually, as you can see here, it's a smooth guide for direction. Okay. Next thing I look at is my Bollinger Bands. Now, the Bollinger Bands I use here on NinjaTrader are, actually, it should be 20 period 2 standard deviation Bollinger Bands. Let me hit apply. I think I was testing some stuff earlier and looking at what 3 standard deviation looks like. And actually should be actually 20 period 3 standard deviation. Let's get that right. 20 period 3 standard deviation Bollinger Bands also have a calculate on each tick. I think this is an important part of anytime you're looking at an indicator. You'll see this drop down here on Ninja. You got on bar close, on price change. I like it on each tick because it keeps me into the latest movement of what's happening with your indicator. And I think it's extremely important to use it. Click apply, click OK. So then I come here and I look at, and you can play with these settings. My settings aren't final. As you can see, I was even playing with them. Sometimes I'll do that just to kind of get a little perspective. I expand the deviation and stuff like that to see what it looks like. I don't use the middle Bollinger Band. I just use a 10-day moving average. Middle Bollinger Band a lot of times is going to be that standard 20 period moving average. And what I look for is this. If Bollinger Bands are open, if the mouth of the Bollinger Band is open and we're going in that direction. So for example, here, you see how this top Bollinger Band is starting to open up and the bottom one is actually starting to bend a little bit. And it looks like it's going to almost open up like a mouth, right? So when you look at that, that tells me that volatility is expanding, right? So anytime a Bollinger Band is starting to widen away from price, you want to be with that price. So it's just psychological. When you look at it, when Bollinger Bands are open, price is expanding, right? Volatility is expanding. So it tells me that it's almost like that thing where it's trying to go and catch it. Price is going to go and try and catch it. Some people will look at Bollinger Bands and say, oh, I just like to use, maybe the 2 standard deviation or the 1 standard deviation as resistance or support on a spike move. I don't really like that. I actually kind of like that for crypto. We're actually going to talk about that in a little bit, but for regular day trading and just my overall thought process on where the markets are headed, I like to go towards a Bollinger Band. So I like to trade towards an open Bollinger Band. We're open and that we're above the 10-day moving average. Next thing we'll look at is an RSI. I use the regular settings on here. It might look a little different to you guys, but it's just because I get rid of the moving average and I just use the RSI. I bold that line out because it's all I want to see. Overbought 70, oversold 30. Are we there? No. So you look at this right now. This is interesting, right? You see, we're kind of in the middle here of where this is. And you look at any time the S&P has started to rotate lower, we've gotten overbought, or anytime we started to rotate back higher, we've gotten oversold. So if you look at the last couple of weeks, you can see that we've just been in the middle of this RSI. So as you can tell, you've seen it intraday, everybody, we've just kind of been sloshing back around. Well, now it looks like, to me, with that mouth of that Bollinger Band open, that we're above the 10-day. We now have CPI data, jobs data, things telling us that it's more bullish, where we are potentially going to, I think, go up for a period of time now, right? And so I don't have any real area that I'm looking at as a target up here, but I do think that it's very possible that in the next several sessions, I'm only looking long. The only way that would change my mind is below the 10-day moving average. So I know I went a little bit long there, but I just wanted everyone to understand where my mind is when you come into a day and I look at it and go, long only setups today, Anthony. Too many things telling me to only be long, do not be short.
So, Anthony, I love it because it kind of touches on everything that you would want to know about a market in a very simple visual. You've got trend with your moving average. You've got volatility with your Bollinger Bands. You've got momentum with your RSI. So you're pretty much covering all the bases without being redundant.
Exactly.
Which I really like.
Yep. And you and I have discussed this so many times. Most people will be redundant with their indicators. Maybe you put a stochastic, or maybe you put a MACD along with an RSI. You're probably going to get a similar signal. I don't really care which one you use. Williams percent R, that's another good one, right there. Whichever one you want to use, that's up to you, but just get used to using it and get better at using it. You don't need more indicators. It doesn't make you better, right? Just kind of put them out there and just give you a basic idea of where the one side of the market you'd rather be on than the other side. Let's not complicate this. So for me, it's pretty simple. News is bullish. Technicals are bullish. When those two things work together, I only want to be in that direction, right? So that's something to think about. Next is we're going to go to the E-Mini S&P 3-minute chart, okay? Why the 3-minute chart? Because it just fits in with my execution, right? I just talked about this a few minutes ago. I started to put some longs in, and I'm actually using some event contracts. I'm just buying some yeses or at the money. We can maybe talk about that in some different shows, but it's a pretty interesting way to go about trading a direction of the market. And just using some micros, actually, just because I don't want to be too much of a position in right here as I'm on, Tom. All of a sudden I got to go, wait a minute, got to go. No, but long a little bit around the 04 to 01 area. Just put some scales in there and I'll explain exactly why. Okay. First thing you're going to look at here is what's on these indicator charts, right? Or what's on these charts. So I just have a bar chart. I just like it pretty simple, right? You have an order flow anchored VWAP. I've talked about this a ton of times before. People know I've talked about that many, many times in the past about what that is. And I want to go over quickly what the indicators are, what are the properties for that indicator. So I'm using a session and I'm using the CME US Index Futures RTH. Some of you may not even know that this is even in there in Ninja. And what you have here is you go to your trading hours, and now this indicator is going to be pinned to the opening session bar. Okay, so no matter what time frame I put this chart on, it's going to go to the regular trading hours. It's RTH session bar, right? And I'm going to use these 3 standard deviation bands. I leave those the way that is. I also have red and green, and I'll explain what that is when you look at the chart a little bit more. And once again, to calculate on every tick. I use this for every indicator because I want the indicator to be up to date. So that is that order flow VWAP. Okay, so we'll hit cancel there. And so this is that red or green. And actually, let me just widen this out because we don't even really care what CPI has done to this point because it is what it is, right? Now you have any time that the bars are above, okay, that order flow VWAP, it'll show it's green. Once again, I'm very visual, so I love this. If we're above it, it's green. So you can make this blue if you want or whatever color you want. It just tells me if we're above the VWAP, most likely I want to be long. So that already is triggering in my mind from my daily, from CPI, look for longs, okay? I also take the 3-minute opening range high and opening range low. So I take a 3-minute bar and I box it out with horizontal lines, okay? So now what I look for with this VWAP is once this VWAP starts to get up to the top of that range or it starts to peek its head above it, now I could start to get long. That's why I said I finally got the opportunity to get long, because until the day sets up and that VWAP gets outside of that 3-minute range, I think we're going to be boxed in. So I want to be long today, right? And earlier this morning, I'm like, oh man, I'm watching them break. I'm even thinking to myself, do I start buying them here? I couldn't. I had to wait, and I finally am just getting that trigger in this area. So right around 3,900 to me is really a very important support area right now. It's top of opening range, also the order flow VWAP. So if it holds above here, I want to be long. And targets are going to be these order flow VWAP standard deviation lines. I'm going to get into that in just a minute, but I just want to kind of get caught up with you here, Tom, and just see hopefully everybody has the basics of what I'm looking at here.
Yeah, and I think, really great thing about NinjaTrader platform is that VWAP feature that you pointed out, which is you can anchor it to a very specific point of the day without having to know when that is, right? We want to know when the market opens. I don't know with time zones or what time that is, but darn it, I'm going to use that regular trading hours. And that's great because that's somewhat of a unique feature. And I'm speaking from my experience being at other companies that have different platforms. This makes this really easy. I just want to point that out. It's a very special feature coming from somebody who's used different platforms.
Yeah, I love it. And to me, like I said, it's very visual. And this is just my favorite chart right here. I mean, this is the chart I'm looking at all day, every day. The other thing we're going to look at is for some confirmation. So before I talk about a couple of things, I'm going to talk about where I'll be wrong on the trade, because that's the most important part. I'm going to talk about other things I see for confirmation. So let's go and look at this RSI. We've already talked about it on the daily as well. Actually, I should make sure that to me looks like it might not be. Let's go to here. There we go. And see, this is on bar close. This should be on each tick because I just added that this morning. I'm not usually using. Did I lose you guys?
No, we're here. I think. Can you hear us?
Yeah, I lost you guys for a second.
Okay.
You guys there?
Yeah, we're still here.
Yeah, I flashed out. All of a sudden, I changed the RSI and the whole world started flashing out. So, so the RSI is not quite overbought. It'd be something that I'll look at. I just keep this up here also as a gauge. Once again, not redundant on my indicators. Next thing I'm going to look at is the order flow cumulative delta. This is important, right? So this is the net, what's happening on the bid and the offer, right? How much is getting bought on the offer versus sold on the bid. And you could see that there has been 27,000 more bought on the offer than sold on the bid. So why is this important? Because if I'm bullish and I see that offers are getting chewed up and this number is going up in cumulative delta, it tells me that the volume is supporting my thought, right? And that's extremely important. So when you have that happen, you want to look at it and say, look at, they are buying the market. It's coinciding with your technicals and your macro, right? So as you can see here today, there's been a lot of buying. So that's supporting my idea. That's all I look at this for. And some people will say, the two most important things obviously are volume and price, right? And this is, instead of looking for volume for the day, you can look at what's actually happening on the bid and the offer. And that's an extremely important part of this puzzle, because I can see that it's confirming what I am doing, right? I want to buy on the offer. As you can see, we continue to uptick here, but to me, it's a great confirmation tool. If I were to see him selling on the bid and I'm buying, well, then I would be like, okay, well, let's reevaluate here. Maybe if it's pushing through my support and they're selling on the bid. So, that's why I like this tool. Once again, just a confirmation.
Yeah, and Anthony, one thing that I didn't mention in the daily chart, because I knew we were coming to the intraday chart, that missing piece or that fourth item I kind of talk about with technical analysis is volume for sentiment, for confirmation, like you just said. So while it's, it's definitely here with that order flow cumulative delta. It's just not the traditional way people think of volume. And I think it's, for a trader, it's really more valuable than the traditional volume chart that you see at the bottom of most, most traders charts, or most analyst charts. The cumulative delta gives you a little bit more insight than strictly how many contracts are traded at this time.
Yeah, much better tool. And actually, as I'm looking at things, I'm starting to actually look for scales out. But I want to talk about a couple of things here. Why do I use these 3 standard deviations? Right, these are going to help me guide through where I'm wrong and where I'm right. Okay, where the potential is. So I like to look at 1, 2, and 3 standard deviation moves. So on this move right here, as you could see this morning, when we started to go higher, we were hitting 2 and 3 standard deviation moves away from the anchored VWAP. So it tells me that the potential to the upside when holding above a VWAP was 2, potentially 3 standard deviations. Okay. So what does that tell us? It tells us that if the market's going to stay up above here, it's got a lot of power to the upside. We've got the follow through with the delta. We're seeing it with the standard deviations. So these are support and resistance levels for me. And so what I'll do is I'll shrink them down a little bit. So as they start to get wider, obviously as the day started to get more volatile and we're starting to get that further standard deviation away, to me, where you look for scale outs is standard 1 and standard 2 deviation. You want to be out of most of your position here because we haven't quite gotten a 3 standard deviation move yet. And also, it's just unlikely when a move where the market's already moved up this far. So I look at this area to almost be boxed in. I feel like 3,900 to 3,923, that's my range. Right. So that's the range of execution for me to buy a little bit in front of, as I talked about, and then look for some areas to cover between 3,911 and 3,923. I'm all about scaling in and scaling out. So that's what I use these for. It's very simple. Where am I wrong? So you look at it, a lot of people will look at like what's a 1R, equal risk versus reward. I told you earlier, I tried to start to buy a little bit in front of this VWAP because you never know if you're going to get in. And of course, it spiked below it. But where I'm wrong is one tick below this 1 standard deviation line, that's my hard stop. So I'm looking at somewhere around 12 to 15 points of stop risk in there, and the same thing up in here. So you're looking at 1.5 R, but that's just really what you're going to get on a big up day like today. Now you could leave some trailers and potentially look for that 3 standard deviation move. And what I would do is when you get up into these areas, you take off most of your position, which I would do, and then I just put a trailer stop below this low. And I say, look, if it takes out that low, it's probably going to go get that other standard deviation. Why give it any more? So then I actually take my risk reward up in my favor. So I just move my stop up, and maybe the further we get up, the more I'll move the stop up, maybe below 1 standard deviation. But that's one of those things where you adjust and you look at the day and you make that decision. So that's how the whole trade sets up.
And with, when you're looking at an E-Mini chart, you could certainly do it on the E-Mini chart, but also with the micros, you have a little more flexibility to have let's say a 5 micro trade and maybe do a 2, 2, and 1.
Yeah.
As far as your, layering out of the trade, when you have, let's say, a long position here, 1 standard deviation, you get out 2, 2nd standard deviation, you get out 2, and then maybe you keep that 1, moving your stop up over break even, right? So even if it does come back down, you don't get your target, you're still profitable on that stop.
Yeah, exactly. And I'm using the ES to chart everything. A lot of times I'm using just the ES, but a lot of times I'll use, actually, I shouldn't say a lot of the times, less times I'm using the micro because I prefer the bigger ES for this. But for the NASDAQ, I only use the micro. So once again, it's how wide is the risk, and that's going to determine whether I use micros or whether I use the big contract, right? So that really summarizes this. One thing I want to talk about as we start to get into these big crypto moves is everybody's watching right now. A couple things I should just talk about. Obviously, you've seen this move here in Ethereum, and I just pulled this chart up real quick. Same process for me to look at that. And in Bitcoin. But there's one thing I always want to mention is that I know a lot of people have spot positions. I actually owned recently some ETH and some Bitcoin, which I've now since kind of dumped them all. I've got a little position left in each. But I don't even really know that I want to hold on to any crypto at this current moment, but that's a different story. But one thing I will mention is that CME Group has futures on these products. And one of the things I was actually looking at last night, and even this morning, was something like the micro Bitcoin or the micro ETH, and those will help you hedge against your positions, right? If you have a spot position and all of a sudden the market's starting to tank and you don't want to get out of it, micro Bitcoin or micro ETH futures, or even Bitcoin or ETH futures, a little bit of a bigger contract, could come in here and help you hedge against those portfolios, or even just day trade them, and you get the futures stuff alongside of that. So you just go to cmegroup.com to learn more about those products. I think in these times, especially as much as we've seen this news come out with Bitcoin and ETH and stuff like that, it's great to have futures to offset those positions if you want to keep your spot, because at least you can stay hedged, like I said, or you can just trade the price action. So for me, I just wanted to mention that because I think it's extremely important in this environment. You don't want to be a hodler in this, and you can actually just go in and short the futures if you had to. So go to cmegroup.com to learn more about that. That'll help you there.
Yeah, that's great. And especially, what a week with so many things happening in the crypto space, big news out of there. You've got the election results, and then we've got the CPI number. It just seems we're living in extraordinary times every day almost. But great information there on the micro Bitcoin, micro Ether front. Thanks for that. Just real quick, I do want to get to the question of the week. So we have a weekly feature where we feature a question that you, the viewer, can submit via Twitter. So if you want to ask us a question about what we've talked about today, about other things in the, regarding trading, you can submit a question. Just make sure to include hashtag AskDYE and the Twitter handle at NinjaTrader, and we'll get the question and we'll put it on air just like we're doing now. So real quick, I do want to bring up the tweet that we picked for this week, which is superfan Anissa. I don't know if she sleeps, but she seems to be on a lot of our shows. She's there at the bar's closing, which is nighttime where she is. But her question is, what instruments do you use to establish your daily bias besides the opening range, VWAP, Bollinger Bands, market volume profile, order flow? So she kind of picked out your chart. She's seen the show before. But her other part of the question is, do you also take into account VIX, tick, trend for trading the indices?
So, Anissa, you're the best. Thank you so much for the question. Everybody out there, definitely send your questions in. I've talked about this in the initial Develop Your Edge episode, where I think it's so important that you're open about the things that you're struggling with, or things that are you're interested in learning more about. Ask DYE on Twitter, hashtag. Of course, you could make sure you follow myself and NinjaTrader on Twitter to find where those hashtags are. And I would say, to the answer to this question as we close out this week, no, I don't use those things. I used to. I look at it like this: is that when I come into the day, there's a theme every day with the macro environment. What is it? Today's obvious day, right? Not every day is going to be as obvious as today. And as I could see, it's nice to see them keep upticking here on the S&P. But, these types of, that's all I need, is that macro idea about what's happening in the market. Just commit to it. That's what it is. Then I go to my charts and I look at it, and it's like, I had enough proof from that to tell me the direction of the day. I don't need anything else. I'm a simple man when it comes to trading. I want to know what direction I want to be in, and I want to find a spot I know I could lean on, where I feel like it could hold, and I want to have some areas that I look for scales out of the trade. That's all I want to see, because once I find a direction I like, I trade it, and that's it. And so for me, I just don't feel that I need more than that. But some people do need more, and some people can consume more than information. It's always a choice. I personally need just what I talked about today. And like I said, this is really what we're going to be talking about a lot every week here, and maybe some little tweaks and differences that I use. But it really does help me by keeping it this simple.
Yeah, for sure. Thanks for that. Thanks for that answer. And thanks for the question, Anissa. And please, those of you watching here, feel free to contribute, as we mentioned before. Griffin is another regular contributor to our bookend shows, and he makes a comment. I think it's in jest. You need to comb that hair if you're going to be on with Deli. So I thought I combed my hair. Maybe I need to go see a barber and thing, but I'm not going to compete. I mean, this is great educational fun. So just happy to be here. But we're kind of hitting up against time, Anthony. How can people find you?
Just go to anthonycrudele.com, add Anthony Crudele on Twitter, and also go to placeyourtrades.com. We talked a little bit about event contracts today. I mentioned those. I'm using those actually today as well, buying those yeses. So you can check me out there. And that's it, Tom.
Awesome, Anthony. Thanks for everything you do, and thanks to the viewers for being here. We will be back here later, 3:15 on bars closing, and Anthony, I'll be back next time. Same time this week next time. So in the meantime, have a great trading day. We'll see you next week.